All right, so we're seeing a lot of red here, but not in stocks. Commodities getting smoked. Crude oil down about $10. That was that $10 baked in that Goldman says that was like, well, if there's nothing that's going to happen, that $10 is going to come off real fast. And that's exactly what we saw. We also, let's just talk about what's going on in the corn market here. Corn futures still under pressure. Both July and D's contracts made new lows for the year on Monday. You have good weather and Iran's limited retaliation response and potential. We have a ceasefire pushed crude sharply lower. That was just talking about key pillar for support for corn, maybe. Weather isn't helping the bull case either. Rains are expected this week across the north central Midwest, with northern Iowa, southern Minnesota, and eastern Nebraska in line for the heaviest totals. And looking ahead at that 6 to 14 outlook shows mostly normal precipitation and seasonal to slightly above normal temperatures. But again, we're going, if these temperatures don't persist during the night, these seeds aren't as stressed and it's going to be a better yield, better crop. Speaking of crop, we have crop conditions slip 2% to 70% good to excellent, but that's still the best rating for this week in the past 5 years. Export inspections were also solid, with Mexico, Japan, and Colombia topping the destination list. Total inspections year to date are running like just a smidge under 29% ahead of last year. However, open interest dropped more than 13,000 contracts on Monday's break, suggesting a combination of profit taking by shorts and forced liquidations by longs. All right, and we also had the COT data out. It showed it's still most bearish position since August of last year, net short 185,000 contracts. Traders looking ahead against the June 28th USDA acreage report. Check out the newsletter. We did a little bit of research on the historical price action. There's a lot of good information. You might want to check that out. Please check that out.